Welcome to our deep dive today. We're going to be looking at some signs that might point to a financial crisis. And we'll be using recent market activity and some historical parallels to kind of unpack it all. And
Right.
one of the things that we found really interesting was Warren Buffett and some of the unusual moves that he's been making.
Yeah, and the experts are definitely taking notice, so
So let's get into it.
buckle up.
Yeah, buckle up, because understanding these signs could be really important.
Absolutely, it could have a real impact.
Yeah, so let's talk about Buffett for a sec.
Okay.
Berkshire Hathaway sitting on a record $318 billion
Wow.
in cash.
Yeah.
Almost double what they had in 2023.
That's significant.
And that's a pretty big deal, right?
It is, yeah, especially considering his his strategy that he's really well known for, buy low, sell high.
Right.
And you can really see that in action, for example, after the 2008 financial crisis.
Uh-huh.
He deployed a lot of cash and acquired stakes in companies like Goldman Sachs and Bank of America when everyone else was selling.
Wow, so like the opposite of what everyone else was doing.
Yeah.
So right now, a lot of people are thinking that this huge cash position suggests that he's anticipating another market correction.
Yeah.
It's like he's waiting to buy all these assets when they're on sale.
Yeah. Yeah. It's like he's getting ready for a shopping spree.
Yeah, exactly.
And, when everybody else is panicking, he's going to be ready to buy.
Right.
Now, let's shift gears a little bit and talk about the bond market.
Okay.
There have been some things happening in the UK and Germany that are worth looking at.
Okay, yeah. So for those of us who maybe need a refresher, what are bonds and why are these bond yields so important?
Well, think of bonds like a loan to a government or corporation,
Okay.
and the yield is the return that investors demand for lending their money.
Okay.
So higher yields signal that there's an increased risk
Makes sense.
or worry about the borrower's ability to repay.
Got it.
So that's why it's important.
Okay, so what's been happening in the UK and Germany that has people worried?
Well, in the UK, there was a massive sell-off of government bonds.
Uh-huh.
These are also called gilts.
Okay.
And foreign investors sold 22.3 billion pounds worth of these gilts.
Billion with a B.
Billion with a B.
Wow.
Which shows a real lack of confidence in the UK economy.
Right.
And then shortly after that, Germany announced a pretty surprising 500 billion euro spending package.
Huge.
Yeah. And this spending package likely led to increased bond yields because investors wanted higher returns to offset the perceived risk.
Right, because now there's more debt.
It is
So
riskier.
more debt, more risks.
Right. And higher yields.
Yeah, it's a bit of a double whammy.
It sounds like investors are starting to get really nervous about some of these safe havens like bonds.
Potentially, yeah. And then you add another layer to this.
Okay.
The central banks are sending mixed signals.
Right. It's almost like a game of tug of war.
It is.
With the global economy.
Yeah. On one side, you have the European Central Bank,
Right.
and they're cutting interest rates,
Right.
which indicates that they're concerned about a slowdown.
A slowdown in the economy.
Yeah. And on the other hand, we have the U.S. Federal Reserve, or the Fed,
Okay.
and they're in a really tough spot.
Yeah.
If they cut rates too soon, it could reignite inflation.
Right.
But if they keep them high, it restricts liquidity,
Yeah.
which could spark a credit crisis.
So it's a really delicate balance.
Yeah, they're walking a tightrope.
Yeah.
And all this uncertainty is adding to that market jitteriness.
Yeah, definitely. And even some of the biggest players in the market.
Yeah.
Like those magnificent 7 tech stocks that have been doing so well.
Right.
They're starting to show some weakness.
Yeah.
The S&P 500 as a whole has been struggling, and it seems like even these giants are feeling the pressure.
Yeah. And it makes you
Yeah.
wonder, we've seen this market exuberance for so long.
Right.
Remember we talked about liquidity events?
Yeah, that's when there's a shortage of cash in the market, right? Exactly. And that can lead to this chain reaction of selling as investors try to cover their positions.
Like a domino effect.
It is.
So could this be what Buffett is anticipating
Yeah.
with all that cash he's holding?
It's possible,
Yeah.
and it's something that we've definitely seen play out in past financial crises.
Like in 2008, when that liquidity crunch caused all those financial institutions to collapse.
Exactly. And remember, Buffett was really well positioned before that crash.
Right.
He got out of all the risky assets early and then used his cash to buy up all those undervalued
I
assets.
think he knew.
Yeah.
So if history tells us anything, his actions now could be a sign that we're in for another major market event.
Yeah, let's look back a little further in history.
Okay, let's delve into those history books
See what we can learn.
and see what lessons we can learn from the past.
Yeah. You know, the 1998 long-term capital management crisis is interesting.
Oh, yeah.
It really shows us how a bond market meltdown can impact the whole financial system.
Right. That's the one with the hedge fund that made those risky bets on the Russian bonds.
Right. What?
And then Russia defaulted and it all just blew up.
Yeah, LTCM had a ton of leverage, which amplified their losses.
Right.
And they had to start selling assets for super cheap,
Oh, wow.
which caused a huge market panic.
Oh, no.
The Federal Reserve had to step in with a bailout to prevent a total collapse.
So it sounds kind of similar to what we're seeing today in the UK and Germany.
It does, yeah.
The bond sell-off and all the concerns about government debt.
Exactly. It's a little eerie how similar it is.
Right.
Let's go back even further to
Okay.
the big one.
The 1929 Great Depression.
Yeah, the Great Depression.
Okay.
One of the crazy things about that crisis was how out of touch the average person was with what the big investors were doing.
So it's like those investors saw what was coming,
Mm-hmm.
and they quietly got out of the market while everyone else was just clueless.
Yeah, exactly. Like they were partying while the whole system was about to crash.
Wow. And some people are worried that it's happening again.
Yeah, especially with Buffett doing what he's doing.
Right. It's like a flashback to 1929.
It really is. Makes you wonder if we're on the verge of another major downturn.
Okay, so we've got Buffett hoarding cash, the bond markets freaking out central banks all over the place, and history repeating itself.
Yeah, it's a lot.
But what could actually trigger this financial storm?
Well, one big concern is a global liquidity crunch.
Right.
Remember, the Fed has been doing quantitative tightening.
Right. They've been pulling $95 billion a month out of the system.
Yeah, to fight inflation.
Right. But doesn't that also risk, like, tanking asset prices?
It does. If they remove too much liquidity too quickly, it could cause a cascade effect.
On everything.
Yeah, stocks, bonds, real estate, everything. And then everybody starts panicking and selling everything they have.
That sounds terrifying.
It could lead to a full-blown meltdown.
Okay, so that's one trigger. What else?
Well, artificial intelligence is playing a bigger and bigger role in trading these days.
Right.
And while AI can be a powerful tool, it can also make markets even more volatile.
Oh, yeah, like that crash in March 2020.
Exactly. AI trading models might have actually made that crash worse because they react so quickly to any little change.
Right, like way faster than any human could.
Yeah, and that can lead to some crazy, unpredictable market behavior.
It's a whole new world out there.
It really is, and we're still figuring out how these AI-driven markets will behave when things get really bad.
Okay, that's a little scary.
Yeah, and we can't forget about the bond market.
Right.
All that record-high government debt and rising bond yields, it's like a ticking time bomb.
And we've already seen those warning signs in the UK and Germany.
Yeah, if that trend continues, it could be a disaster for the global financial system.
Okay, and then there's always a wild card.
Oh, yeah.
Like some crazy geopolitical event.
Right, something completely unexpected.
Like a conflict in Taiwan or something in the Middle East.
Exactly. Anything that shakes global confidence could send markets into a tailspin.
It's a lot to think about. So we've got all these signals, potential triggers, historical parallels, and the need to be prepared.
Right.
But what don't we know?
Well, one of the biggest questions is, are governments and central banks ready for another major crisis?
Right, because we're seeing different strategies from central banks all over the world.
Yeah. Are they all on the same page, or are some of them missing something?
What about AI's role in all of this?
Right. We've never seen how AI-driven markets will perform during a full-blown crisis.
Could it make things even worse?
Yeah, we just don't know.
And then there's the even bigger question. Is this whole system sustainable?
Right. The one built on fiat currency and mountains of debt.
Yeah, is this a sign that it's all about to come crashing down?
It's a possibility, and maybe that's what Buffett is betting on.
Wow, a system reset.
Yeah, a whole new paradigm.
So much to think about.
It is.
We've covered a lot of ground today.
We have.
And it seems like there are more questions than answers.
That's true, but we're not just sitting ducks in all of this.
You mean we have some control?
We do. We have choices to make that can impact our financial well-being.
Okay, so like what should we be doing?
Yeah.
You know, so we've been talking about all these like warning signs and potential problems.
Yeah.
There's one thing we haven't really touched on.
What's that?
Trust.
Ah.
Trust
Yeah.
in the system. Trust in governments. Trust in institutions.
Right.
I mean, it all plays a role.
Right. Absolutely. It's fundamental to how markets work.
Right. People invest their money because they trust that the system's going to protect their investments.
Exactly.
They trust that companies are going to be ethical, that governments are going to make smart decisions, and that central banks will keep everything stable.
Right. But what happens when that trust starts to disappear?
Yeah, then things get shaky.
It can become a self-fulfilling prophecy.
Right, because if enough people think the system is rigged or that it's not going to last,
Yeah.
they'll start pulling their money out.
And that can actually cause the crisis they were worried about.
Wow, so it's like a vicious cycle.
It is. And we're seeing signs of that declining trust everywhere.
Yeah, people are losing faith in institutions and experts in the whole system.
Yeah, it's a tough cycle to break.
So how do we even start to rebuild that trust?
Well, it's not easy, but I think it starts with transparency.
Okay.
Institutions need to be more open about what they're doing, why they're doing it, and what their plans are.
So no more secrets.
Right. They need to communicate clearly and honestly with the public, address people's concerns, and explain things in a way that everyone can understand.
So basically straight talk.
Exactly. No more smoke and mirrors.
Okay, so transparency is key, but what else?
Accountability.
Right.
When someone makes a mistake, they need to be held responsible.
Whether it's an individual, a corporation, or even a government.
Exactly. Everyone needs to be held to the same standard.
Because if there are no consequences for bad behavior,
Right.
people will lose faith that the system can fix itself.
Exactly. So we need transparency, accountability, and I think fairness is important too. The system needs to work for everyone, not just a select few.
It can't just benefit the people at the top.
Right. We need to address income inequality, create more opportunities, and make sure that the benefits of growth are shared by everybody.
Because if people feel like the system is rigged against them, they're never going to trust it.
Right.
So transparency, accountability, and fairness,
Yeah, those are the key ingredients for rebuilding trust.
it's a big challenge.
It is, but it's essential if we want to avoid these crises in the future.
And it's not just up to the institutions, right?
Right. It's on all of us.
We need to be informed citizens, participate in the process, and hold our leaders accountable.
Exactly.
So to all of our listeners out there, we challenge you to think critically about these issues, engage in conversations, and demand better from our institutions.
Yes. The future of our financial system and really our society depends on it.
That's a powerful statement.
Okay.
So to wrap up our deep dive today, what's the one thing you want our listeners to take away from all of this?
Don't underestimate the power of knowledge.
Knowledge is power. I love that.
Yeah.
To all our listeners out there, if you've stuck with us this far, you're officially part of the informed minority.
That's right. And now it's up to you to decide what to do with that knowledge.
Right. Are you going to ignore the signs and just hope for the best?
Or are you going to take action to protect yourself and your family?
The choice is yours.
It is.
And that concludes our deep dive for today.
Yeah.
We hope you found this information valuable and empowering.
Absolutely.
Remember, stay informed, stay vigilant, and stay curious.
And until next time...